In the 1980s, Japan's economy was the envy of the world. It grew by leaps and bounds, ready to overtake the US to become the world's largest economy. But then it didn't. An asset bubble that had built up during the 1980s burst in 1990, causing Japan's economy to stagger. This pushed Japan's economy into a period of prolonged stagnation and deflation, a period known as the Lost Decades. Japan, which was the future, is now stuck in the past. What happened to Japan, and why is it finding it so hard to recover? We'll see. Do give this video a thumbs up and subscribe to this channel. The truth is, free market economies are subject to cycles. These cycles consist of fluctuating periods of economic expansion and decline seen in the country's GDP. But the length of economic cycles can vary, and this is what determines whether there is a problem or not. Now, an economy is said to be in recession when it records a fall in GDP in 2 or more consecutive quarters. But it could be worse and extend over a long period of time, like the Great Depression in the 1930s. From 1991 to 2001, Japan experienced a period of economic stagnation and price deflation, which we now famously call Japan's Lost Decade, where the country suffered from both a credit crunch and a liquidity trap. A lot of people assume that Japan has totally outgrown the period, but the graphs and figures don't show that. In fact, they show the exact opposite. Japan is still a struggling economy. Starting in the fall of 1989, Japan struggled with its equity and real estate market. Equity values hit 60% from 1989 to 1992, while land values dropped throughout the 1990s and even into the 2000s. As a result, from 1991 to 2003, the Japanese economy grew only 1.14% annually, which is well below that of other industrialized nations. What could have been responsible for such a devastating fall? Well, internal issues played a huge role. It is no news that the Bank of Japan, Japan's central bank, made several mistakes that may have added to and prolonged the negative effects of the bursting of the equity and real estate bubbles. For example, the Bank of Japan put the brakes on the money supply in the late 1980s, which may have contributed to the fall of equity values. As equity values fell, the bank continued to raise interest rates because it remained concerned with still appreciating real estate values. And while higher interest rates contributed to the end of rising land prices, it also pushed the overall economy into a downward spiral. This caused some damages, which, when they became obvious, the Bank of Japan decided to cut interest rates. But unfortunately, it was too late. A liquidity trap had already been set and a credit crunch was setting in. The country's share of global GDP had fallen from 9% in 1990 to below 4% today, with its GDP per person sliding from 81% of America's level to 64% over the same period. Interestingly, it has been projected that by 2050, Japan will drop out of the top 5 economies, and by 2075, out of the top 10. Shrinking populations limits the upsides to its growth, and from all indications, it is bound to happen. Only if Japan can reset inflation expectations, boost productivity, and unleash corporate dynamism. But with a shrinking population, it only seems like Japan's fall from the top league is happening sooner than expected. Another major problem in Japan is the high standard of living. Worse still, Japan's workers aren't getting paid enough to keep up with rising prices. And with inflation hitting record highs every time, it is expected that the Bank of Japan will end its massive stimulus program. Also, Japan's prime minister has been encouraging business owners to help workers keep up with the high costs of living. So it is expected that in the coming years, life in Japan will be more bearable. Meanwhile, the Bank of Japan and the Japanese government have tried a host of different measures to get the economy moving. For instance, the bank was the first central bank to ever implement quantitative easing, which is a monetary policy of asset buying that sought to drive long interest rates to near zero levels. Also, the government introduced the three programs of Abenomics to try to revive the economy. Now, these were great monetary policies that increased government spending and caused changes to the regulations to increase trade and growth. But while these policies kept the Japanese economy from sliding into a prolonged recession or even a depression, they failed to move it out of stagnation. Things were getting better with a wide view of hope until the COVID-19 pandemic hit. The pandemic worsened the country's problems and further destroyed the economy. For instance, real GDP declined at a rate of over 32% in the second quarter of 2020, before recovering by only just over 20% in the next quarter. This continued with some quiet rises and falls over the next few quarters. Now, Japan's economy still faces several challenges, like keeping the economic recovery going, diversifying investments away from China, and addressing its demographic problems. Like other developed countries around the world, Japan's policymakers have been trying to keep the economic recovery going with fiscal stimuli, like a $1 trillion stimulus package that was instituted by the Japanese government in the spring of 2021, and other outstanding strategies. But in all fairness, keeping the economic recovery going hasn't been easy around the world due to the supply chain bottlenecks and labor market frictions. This is because it creates temporary mismatches between the demand and supply side of the economy. As a result, economic growth has slowed down as prices of goods and services are increasing, especially the price of food and energy. And while rising food and energy prices are a problem for every country, it's even more severe for Japan. This is because Japan is highly dependent on oil imports for its energy needs. So high oil prices take a big chunk of household budgets, reducing further consumer spending, which is the main cause of the country's 3-decade-old stagnation. Another challenge Japan is trying to solve is its manufacturing investment in China. For years, China was a focus of manufacturing investment for Japan. This happened because China's cheap labor force was a solution to Japan's labor shortage, helping its manufacturers stay competitive in the global economy. But while this happened, China became a significant market for Japanese products. Yes, this is not the main issue. The major problem is that China's labor is no longer cheap. Unfortunately, China is facing its own labor shortages, making it lose its competitive advantage. Also, tensions between the two countries over China's aggressive expansion in the South China Sea and military exercises near Taiwan have made their relationship weaker. Another major problem affecting Japan's economy is its demographics. Demographics is a chronic social and economic problem for Japan. In fact, since the 1970s, birth rates in Japan have reduced consistently. This means fewer young people are entering the labor force, ultimately leading to a decline in the country's productive potential. Also, the lack of young people, along with the very long lifespans, creates a highly unfavorable dependency ratio. That is, the ratio of people paying into the country's Social Security fund to the number of retired people collecting from it. As a result, the Social Security fund runs deficits, which the Japanese government must cover from its fiscal budget. For instance, the 2022 fiscal budget allocated 660 billion yen to make up for a shortfall in the Social Security fund, up from an initial estimate of 480 billion yen. This shortfall is covered by issuing debt, and Japan's national debt is currently at 266% of GDP, the highest ratio in the developed world. But addressing demographic problems isn't something that can be addressed quickly or easily. It requires structural changes to the Japanese economy and immigration system. There is no doubt. Japan is facing both cyclical and structural challenges as it continues on its journey to recover its lost economic strength. These cyclical challenges are global supply chain bottlenecks and labor market frictions, which continue to put downward pressure on its economy as it strives to recover from the global recession. The structural challenges, on the other hand, are associated with the 3 decades-long economic slowdown that sprang from the burst of multiple asset bubbles in 1990 and a decline in the birth rate, which creates labor shortages and an unfavorable dependency ratio. A lot of efforts have been put in place to restore the Japanese economy, and this has created a positive outlook for the future. So we'd like to know, do you think recovery is possible for Japan? Don't forget to like and subscribe if you haven't. Where money matters, see you in the comments.